Hi there, tax accountants. I hope all is well, and I pray that as you are viewing this video, that you're in the best of health and spirit. In this video, we're going to walk through completing a Form 1040 and Schedule C tax return for a made-up client using ProConnect Tax software. So here we have our client, Jacqueline Lutz, recommended their best friend, Lori Lashley, to your tax practice. Lori self-prepared and filed her prior year tax return using TurboTax. However, in February of the current year, she made one of her dreams a reality and started a hair salon. The business has been successful, so she decided it makes sense to hire a tax accountant to ensure she takes advantage of deductions and would like to receive consulting regarding strategies to save on taxes. So we have the pertinent information below. We're going to get started, and this is going to be a brand new client. So therefore, we're going to do this for 2025. For those of you that might have used 2024, there were a lot of changes with the one big beautiful bill, so it was easier to use 2024. So I'll show you the differences between the returns using 2024's tax laws in comparison to 2025. So we're going to create a return. We're going to add new, and we know that you can select between creating an individual return or a business return. In this case, we are going to be creating a business return. So we know our name, or the name rather, is Lori Lashley. The date of birth is April 04/16, 1962. The tax ID is 119545697. The email address was not provided on the document. I will update it. So the email address could be lorilashley@gmail.com. I will actually update it in real time. So we have Lori Lashley at gmail.com. And then what I'll do to hopefully make it a little easier, I will put it in the same format. So that way, as you're looking at the document, there's continuity. So social security number, some softwares you'll see it asks for the tax ID. From there, we have the email. Then we have the phone number. And we'll just make up a number. All right, so we start to input this information. We have our address, which is 2706 Beverly Road. And then the great thing, with these new technologies, it inputs the information for you. So you just have to start typing it. There we go. 2706 Beverly Road, Brooklyn, New York, 1126. And you select next. So we officially just created a new client, and here is just making sure, hey, is all of the information correct? Is the first name correct? The last name, the date of birth, etc. So you always want to double check this information, especially the social security number, because if the social security number is incorrect and the tax return is filed, the only way it can be fixed is to be amended, and that's a long process that you do not want to have to go through. So here we select the tax return type, individual, the tax year, and then we have the name of the client. So we're creating the return. And then you've used ProConnect before. So the first step is the profile, and it shows you here the returns that you're going to be filing. So we have a federal tax return, and then we also have New York. There's no extensions or amendments or anything in this nature that's going to be utilized in this video. But just so you know, as you grow in your tax career, you are going to start to see some of these things like extensions and amendments and estimated payments. But for right now, just learning the basics of Form 1040 and Schedule C. So we live in this day and age where there is a lot of technology. So with the advancement of technology, it does help in a sense to make certain tasks more streamlined. So for the previous tax return, you had to manually input the W-2, but now considering technology, you can do things like uploading the W-2 and it will start to pull in some of the information, but obviously you will need to double check. So just to show you how it works, because again, in the profession, these are going to be some of the things that you're doing. Instead of inputting certain information, now you can transition into a role where you are reviewing at the associate level because of the advancement of technology. So we import the document. Then we could also, all right, we'll import it. And then here we see that it's extracting information from the document, and we're going to see that some of the information is shown on, or some of the information was extracted and some of it was not. So here it's going to ask you to review the return, but no, we actually want to see what went in to the W-2. So here we see the W-2 is under income. So there's two ways in which you can navigate. You can make the screen pop out. And then here we see we have these columns: general, payments and penalties, etc. Or we can collapse and then we'll see a different format essentially. So we click on the W-2 and now we want to compare it because, again, technology is great, but sometimes technology makes mistakes. So with that being said, here we have the W-2 and we're going to compare it to make sure that everything is correct. And typically in the profession, what I do, I am personally a person that prefers pen and paper, but I know we live in this day and age where we're trying to conserve. So with that being said, what I would do to make sure everything is correct is I will check it off. So here we have the employee EIN number is 132501125. So that's correct. Making sure that the employer's information, all of this is accurate. So we'll make this collapse, making sure that it is accurate. Perfect. And then we start to scroll down. Now we see the income information. We want to make sure this is correct. So we see our wages, federal income tax boxes 3 through 6. All of this is correct. Perfect. Box 12 was blank. Box 13, nothing was checked. And we see box 14. However, none of the information from box 14 picked up. So these are the things where there's always going to be a need for a human. So I know a lot of people, they are afraid of technology, AI, and things of that nature. They're thinking that your job is going to be stolen. It depends on your approach. If you accept it and you use it to make your job better, right? The mindset is that ultimately it cannot really replace you. So just keep that in mind. Can't really replace you. There's always going to be some need for human intervention. So here we see box 17 picked up for whatever reason. Box 16 didn't pick up again. Limitations of technology, 21105. And then we see, well, it says if different, you don't have to input it. So here you see it gives you also a help box. Normally when you hover over it, it'll show you. For whatever reason it does not. So typically what persons would do is they can either enter it here, but this is for the electronic filing, but then everything needs to be input. So with ProConnect, it gives you multiple places where you can input stuff. Every software is a little different. But in such case, me personally, I would prefer to just input it just in case, because as a tax preparer, you can get into the habit of automatically thinking that box 1 and box 16 are the same when, depending on the state, they might not be. So that's why I always just get into the habit of just inputting it, even though it's not different. And then we have the local income taxes withheld. $333. Perfect. So we caught all of the information that was not picked up by the AI. So now we can review our return. And we know that as of right now, we're just focusing on a federal tax return, but you could also start to pinpoint and see some things as it relates to the state side. So we have our total W-2. This is correct, $21,105. And then we see the amount of taxes that were withheld for federal income tax purposes on line 25A, which corresponds to box 2. We can also verify with New York. We want to make sure that the taxes withheld were picked up correctly. So this is why it's so important to double check. So we see that the New York City state taxes of $645 were withheld. And even though I input the $333 for local income tax, it didn't pick up. So that's why it's so important, again, not to rely on technology. You need to go back and double check. So now we need to figure out, okay, why did it not pick up? I put it on the wrong box. That's why. So depending on the program, there's certain nuances that you need to be aware of. This is a small amount. This is $333. But imagine if it was $3,000, $30,000. So in such case, you need to understand the ins and outs of the program. The tax formula does not change. However, the interface of the tax software that you're using, it does change. So now we go back. And we want to make sure, okay, this $333 needs to be there because this is a credit. This $333 represents money that was withheld from the employer to be applied to their taxes. So there we are. Perfect. It picks up. All right. So we input our W-2. And in addition to that, so what I would do, just to let myself know, I took care of it. The W-2 was taken care of. Now we go back to our income section. It lets us know that Lori has 1099 DIV and 1099 INT income. So I get my 1099 INT. And for my 1099 INT, we get it from Capital One. So we start to input the information, Capital One. And then you can input the whole thing. Typically I input it and it matches everything that's on the form. So Capital One National Association. Depending on the software might have the option for you to input all of the information as far as like the address. So every software is a little different. As of right now, ProConnect is just straightforward. What's the name of the payer? Is it for the taxpayer or the spouse? In this case, it's the taxpayer. And then what's the amount? So it's $1,116. Perfect. So we've taken care of the 1099 INT. And then now we have the 1099 DIV. I'll make this a little bigger. And there's 1099 DIV income of 6,120 for ordinary dividends, and then 5,420 of qualified dividends. So this is from ABC Corporation. This is for the taxpayer. Total ordinary dividends of 6,120 and qualified dividends of 5,420. So very important to ensure that these are input on the correct lines. Reason being, total ordinary dividends are taxed at ordinary tax rates in comparison to qualified dividends that are taxed at the preferential tax rate of 0, 15, or 20%. So qualified dividends are taxed similarly to qualified long-term capital gains. So there we have our 1099-V. And then the last document is saying that there's a 1098. So the 1098, this essentially lets us know that Lori is a homeowner. So we're going to use this information for our Schedule A. And as we look through this document, we'll also see that there's some additional things that affect the Schedule A, like charitable contributions, medical, and things of that nature. So here we are. We see this 1098. So now we go to our deductions. We go to itemized deductions. And from there, we go to our interest, home mortgage interest. So depending on the software, if you use a different software, like let's say Drake Tax, the input matches the Form 1098. ProConnect is a little different. It doesn't want to know all of this other information. It just wants to know how much was paid in mortgage interest. So in this case, it's $7,920. We input that information from box 1, the home mortgage interest reported on Form 1098. And then from there, we see box 10, there's real estate taxes. So this is one that is very, very, very easy to miss. So you must make sure that you're checking for it. So here we see the real estate taxes, box 10. This is under taxes. We scroll down. Then we get to real estate taxes and we enter it, the $3,418. If you put the 25 cents, it's going to round. So, you don't have to put it. So we select review return. And then now we see from here more information is populating. Before it was just the 21,000. Now we see that the interest as well as the dividends, both qualified and ordinary, are reported. So we update this. And then we have one more bit of information. It's letting us know that Lori's not married, but she has a son and that there's also a business. So there's some more information for us to go through. So typically what I do when I'm first working with a client, before I even start to input any of the information, I make sure that all of the basic information, the general information, but for purposes of just showing you guys how the smart return works, how AI can be utilized to make your job much easier. That's why we pretty much just skipped over it. But typically the first step is always making sure all of the client information is correct. So we're going to scale back. We're going to start to make sure that this is accurate. So it lets us know that Lori is a resident as of 12/31, 4-year resident. Filing status is single. Is this true? Let's see. We see this information here that lets us know that Lori's married, but she has a son. So therefore, based on that information, Lori is more than likely going to be head of household. So we have the first name, last name, the social security number, the date of birth. And then it's action, is she a dependent? Not applicable. She will not be considered a dependent of anyone else. So we make that assumption. Here we have the address, the basic information as far as the telephone number and the email address and things of that nature. So again, you're going through this just for purposes of understanding how to navigate the software and how to practically apply to different tax concepts. So now we're going on to dependents. It says that a doctor's note was given. So we assume that yes, Elijah meets all of the requirements and he is considered Lori's dependent. So we have Elijah Lashley. Date of birth is March 11th, 2019. Social security number is 116209003. This is her son. They lived at home for 12 months, child living with the family, and then when applicable. So a lot of these things are automatically checked. So we're good to go in that regard. So we made sure that we input information for Elijah. We input our home address, date of birth. So again, for me, just in the profession, just making sure that I input everything. I highlight whatever it is that was already input. So I did not input professor/self-employed. So I will update that for occupation. Depending on the software, some softwares will give you an error if you do not input it. It won't prevent you from e-filing, but it's just good, just in case the client shifts the profession, or in the event that there's a change in the tax law that applies to them. It's just good to know these things. So definitely a practice that I apply in my firm. All right, so we go to income. So we recorded the wages, the interest, as well as the dividends. And now we move on to Schedule C. We know that she was a business owner. What does it say here? February of the year, she decided to start the business. So therefore, now let's think about it. How many months are there in a year? There are 12 months in a year. The business started in February. So therefore, if there are monthly expenses, as we see rent and we see accounting fees, are we going to multiply it by 12 months? No. If the business started in February, that means we multiply by 11 months. All right. So we do that for both rent as well as the accounting fees, not 12, but by 11. So we start to input the information. So the principal business or profession, it is a hair salon. We're going to look up the principal business code. So this is essentially just detailing the industry the business is in, whether they are in rental, if they are in agriculture, the restaurant business. So it basically just details what kind of a business you have. So we have 812112, and this is for beauty salons. The business name is Lori's Look. If the business does not have an official name, then you can just leave it blank. We have the street address. It's located in Manhattan, 1116 Park Avenue. The city is New York. The state is New York. And then we have the zip code, which is 10011. We don't have an employer ID number, but the employer ID number, that would essentially be like a social security number, but for a business. So typically when you have like an LLC and businesses that are registered, like an LLC, an S corporation, a C corporation, you must. But if you have an unincorporated business, like a sole proprietorship or a partnership, getting an EIN number is not a requirement. So here, see, it's asking us which method are we on. We're going to be on a cash basis method of accounting. And then from there, we start to input the information. So this was just the business information where we're inputting things that pertain to the business profile. Now we go to the income statement, and this is where we start to input all of the information. So it lets us know our income amount, which is $716,915. So this is our income. So business went pretty well for Lori for her first year. And then from there, we start to deduct all of the expenses. So keep in mind, how do we get this $716,915? It's accumulation of all of the deposits that were made and any refunds, if any, during the year for Lori's business. From there, we start to move on to the different expenses. Depending on the program that you're using, the program will either list all of the expenses in alphabetical order or the expenses will match Schedule C's formatting. So every software is a little different. ProConnect lists it in alphabetical order. So here we see taxes and licenses. So obviously we're going to be, going back and forth, inputting this information. So we have taxes and licenses. We just have other for 46,280. Oh, this is actually payroll taxes. I will update this. All right, so we have payroll taxes of 46,280. So once we input it, we can, just cancel it out. And that lets us know that we do not need to revisit because we already did what we needed to do. Bank charges of 1560. We had advertising of 74,540. Insurance of 65,075. And then what I would do, so typically I do it either one by one or in bulk just to save time. We see the rent was 5,230 times 11 months. That's $57,530. So 57,530. And then now I start to cancel out everything that I've input thus far. So this is how we got the 57,530, 5,230 multiplied by 11 months. So now we move on to utilities of 40,854. Depreciation is at the bottom. So just regular tax, we have three assets, or two assets rather. So therefore, depreciation. And I would actually just input equipment, 45,815. And in the real world, you're actually going to input an asset, but just to make it easier, just giving you the amount. But in the real world, you would actually need to input the asset. And then the calculation for depreciation would automatically be done. So we handled this. From there, we have our salaries. Now fall under wages, 126,111. So salaries and wages is an interchangeable, way to say your employees. From there, we have supplies. I'll input it since we are closer to that section. Next, we have our interest of $9,685. So you can do this in any order. The key thing is just making sure that you're tracking what you input so you don't get lost. So the last thing we have is repairs and maintenance. And we have accounting fees. So this is easy math. 3,000 times 11 is $33,000 for accounting fees. So 33. And then we have our repairs and maintenance. All right. And you'll see some of the things don't line up. Some of the explanations like we see, or account titles rather. So we see salaries here, but then we see wages down here. Sometimes that's going to happen in the real world. So you'll have to use context clues to pretty much figure it out as you are working on the return. And in the event, let's say that there are expenses that it doesn't match to any of the line items, you click on other expenses, you input the description and the amount, and you're good to go from there. All right, so we finished up the Schedule C. We select Review Return. And now we want to check our Schedule C and make sure that the net income is accurate. So remember, from before, it was just the Form 1040. Now we have all of these different schedules that populated. So here we see now the tax return is correct. We have our gross receipts and sales. And the key thing is that your net profit or loss is going to be $76,618. So if there are differences, there's something that you need to go back and you need to check. So we completed our Schedule C. And then now the last bit of information to finish up this tax return, we have Schedule A. We know under deductions, we already started to input that information. We input our Form 1098. But here we see that there's some medical expenses. So Lori incurred $11,240 of out-of-pocket medical expenses. So in such case, we could just enter it under other medical, 11,240, and you can input it as well. Totally depends on you if you want to put the detail. So out of pocket, typically in my firm, what we do input it. Why? So that way we can ask the client, hey, last year you had out of pocket expenses versus if we didn't put the description last year, or let's say there's a new accountant that's working on the file, they won't know what this amount is for. So the more detail, the better. Next, we see contributions. So we did this. And then we see charitable contributions. So charitable contributions are subjected to certain limitations, but the first limitation when we're dealing with cash contributions, as we see here, is going to be the 60% limitation. So typically what that means is that if your adjusted gross income is $100,000, your charitable contributions are capped at the $60,000. There are some nuances depending on the person's situation. So here we see cash contributions to Grace United Methodist Church, and it is for $10,110. And then we have AA University. All right. And when a client provides this information, you always want to double check to find out exactly, who they gave the funds to, because it must be a 401c organization, because if not, it's not going to be allowed. So if we review the return, the contribution rather will not be considered deductible if it is not an organization that is approved by the IRS. So very important to keep in mind. Here we have Schedule A. So we see all of the information. We have the medical expenses, and then there's a limitation. We have some information as it relates to state and local, but we're going to see that there needs to be some updates because she also paid the estimated taxes for the year. So in order to input the estimated taxes, we go to payments, penalties, and extensions, and we start to input the information. So a key thing is that as you're inputting the information, you do not input in voucher amount. Reason being is because if I create a voucher for a client, it does not necessarily mean that they're going to pay it. That is why it must be entered in the amount paid section. So we have federal and we have state. So each quarter, federal, she paid $3,450, state $2,380. So for each quarter, we're going to input the amount that was paid. And think of this as a prepayment. You know that you have a bill that's coming up and you want to start paying it in advance. That is essentially what estimated tax payments are. So from there, now we review our return. We pretty much input everything for the return. Now it's time for you to do your final check to make sure that everything is accurate. So it's telling us that Lori's going to be getting a refund of $1,238. We start to double check everything. All right, Lori Lashley, her information is here. She's head of household. Her son's dependent information is here. We see our wages, our interest, as well as dividends, as well as the business income. We see that they're taking the standard or itemized deductions rather. Here we see because of the change in the Tax and Cuts and Jobs Act, we see that line 7 is 11,536. We're going to look at 2024 for those of you who started to work on the return for 2024, and you're going to see the difference. So this is how you would walk through the 2025 tax return for Lori Lashley. And then you can also check New York. You definitely want to make sure that there is certain information that is input accurately, because if you are a person that lives in the state of New York, if you also live in the city of New York, you live within the 5 boroughs, which is Manhattan, Brooklyn, Queens, Staten Island, or the Bronx, you will be subjected to additional taxes. So lots of fun. I was just kidding. But that's 2025. So I wanted to show you the difference for those of you that might have prepared the return using 2024. This is what your numbers would be. So because of the change in Schedule A, we see that for 2025, the tax refund will be $1,238, but for 2024, it will be $879. And the main reason is because, yes, it's $11,536 for the total estimated taxes as well as the real estate taxes, but there was a cap at the state and local level of $10,000. So that was one of the big changes for 2024. But as you'll see, the Schedule C information is the same. The face of the Form 1040 stays the same, but Schedule A was one of the big changes. In addition to the fact that every year there is an increase for the tax brackets. So definitely something to think about, but that is how you complete both the 2024 and 2025 tax return for Lori Lashley. Every tax software looks a little different, but the key thing is that you want to ensure that you are double checking the rules. Technology is great. As we saw, there's now this option to import the documents and it makes it a little easier. But sometimes technology doesn't get it correct. So you always want to make sure that you double check. I hope that this video helped. And if you have any questions or concerns, feel free to reach out.